Hey, welcome to the new and improved What's Hot trading strategy. All right, let's go over and get you started on how to trade this amazing strategy. And just to check it out, we've got some past results right here. So this is for TNA and TZA, so we click on this. And you can see that by trading this, now this is for each of the bull markets. And so there's been 3 of them in the last 12 years with the index trading system. And so in the first one, we have 1,000% return, which did 17 times better than the S&P. In our second one, we only did 2 times better than the S&P. And in the current bull market, we're doing like 3 times better than the S&P. So these are the returns that you would expect with TNA and TZA. And if we come over here to the NASDAQ, we started this one just a year ago, so we don't have a lot of data. This is the very first bull market, and since the bull market started on October 6th, it has been in 5-1 the whole time and is up 163% for, what is that, 10 months? So that's not bad. So let's go over how you can trade this and make similar returns for yourself. Okay, first off, if this is for premium subscribers, this web page, but I'm going to show you how to do this later in the video if you're not a premium subscriber, so you don't need to subscribe, but it does make it a lot easier. Alright, so what we're doing is every 2 weeks we're going to update and analyze the index to see what it is favoring. And so we're going to analyze the Russell or the NASDAQ. So right now we're on the NASDAQ. Right now it's saying that the NASDAQ favors medium swings over a long time period, and then there's a table here which is recommending the settings that will profit from medium swings over long time periods. So this is what it's recommending. Now for the What's Hot strategy, just to keep it simple, I'm just going to use, out of this whole table, we're just going to concentrate on the time periods. So these are all the settings that work in long time periods. And so we want to choose the very center of the table, which is right here in the middle, and that is 5-1. Now if it was favoring short time periods, like it is over here on the Russell, which is favoring short time periods, you'll see the middle square is 2-1. So what we're going to be doing with either the Russell or the NASDAQ is switching between 2-1 and 5-1. We analyze it and then we tell you a setting to use, and then we trade that setting for 2 weeks. And then this gets updated again. And if the same setting is repeated, then we do nothing. We just keep trading it again for another 2 weeks. And as you can see over here with TQQ and SQQ, it first gave out its first alert on October 6th. It gave out 5-1. Every 2 weeks it's been updated, and every 2 weeks it's recommended the 5-1s. So we've only had one setting to use, and it's ended up with 163%. Now we see something a little bit different over here with the Russell. Since the bull market began, it has switched between the 2-1. It went from in that one for a few months, and then it switched to the 5-1 for a few months, and then since April of this year, that's been in the last 4 months, it's been in 2-1. And these are the returns here. And if you were to start a portfolio and just keep trading it all year round like you do ITS, your current return would be 116% over here. Now let's go over how you're going to trade. So let's say you want to start your trading in the What's Hot strategy. You'll come up here, you'll check the date. As you saw, it was updated in the middle of August, so the next update will be at the end of August, and so that's when you will start. You'll come back here, and when you see that it's been updated again, then you look right over here in this bottom column right here, and it will tell you the setting that you're supposed to be using. Now here's how to do that. Once you get your setting, you go back to your market timing indicator, and we're going to put in that setting, and then you're going to want to hit update. So now that it's updated, okay? And then you do the click recommendation, just like you do with the index trading system, and you see there's a buy alert today, so you would be buying the TZA. Now, let's say you're not a new subscriber, you've already been trading, and you're already in a setting, and 2 weeks have passed, and now it's giving you the same setting again, that's fine. You don't need to do nothing. Just keep in your current ETF and come back in 2 more weeks. But let's say it had changed and now we're in 5.1. So you'd come over here, you'd put in your 5.1, you would click update, and now you need to see if it's the right time. And it's telling you it's not the right time. So we are currently in TZA, and now it's telling me it's not the right time. So we would close the TZA and we would go to cash. And then every day, the next day after the website updates, we'll come back here again and we'll hit the click recommendation to see if that's the right time to buy. And if it's not, we just keep repeating that until it is. And then once it is the right time to buy and we've got started with this new setting, then the index trading system will send you trade alerts for the what's hot, and then you would just trade that. All right, so now let's say it's had a switch from the 2.1 to the 5.1, and you can notice right here they're both recommending it's moving lower, and you're currently in TZA. So when you click this, if it says it's not the right time to stay in cash, then you'll have to close your TZA. And then when it does say it's the right time, and even if it's saying to buy TZA, then you'll go and you'll buy the TZA back. Now let's say you click this and it is the right time for TZA and you're already in TZA, then you don't need to sell. You just keep holding it and you just skip the slippage of having to sell it and buy it again. Alright, so if you're not a premium subscriber, you're a basic subscriber, here's how to do the What's Hot strategy manually. Alright, so the first thing we need to do is we need to keep track of our time periods. And I'm going to show you the ones that I have here so you can create a Excel spreadsheet and do the same thing for yourself. Now, when I started this is 10 years ago, I was doing it every 2 weeks. So the 16th and plus 14 days would be the 30th, plus 14 days the 3rd. So that would give you, you'd have to do this 26 times a year. I now do it twice a month, so you do it 24 times a year. It's about 10% less work, and your results are about the same. So if you're a new subscriber and you're not using the premium where you're following the system, which started at the end of the month and the middle, you can do this at any time and just do it twice a month. So if you started at the 27th, then you would run it again the next 27th, and then somewhere in between from 15 days from the 27th. So twice a month, and you can pretty much start any time if you're going to be doing this manually. So what I do is I get out an Excel spreadsheet, and then every 2 weeks you put the date down, and we want to mark it short the time frame, and I'm going to show you a little bit after this how to analyze whether it's short, or you can see over here it says long, and then we also have both, and that's where it's tied. So we have short, long, and both. So basically the way I trade this is I will mark here as short, and that means 2-1. I'm going to trade the 2-1. I'm going to trade the 2-1 until I get a long, or until I get a both. But I only switch if there is a 4 in a row before the both. So let me explain that. So here we are at short, and we're in 2-1. Now we have a both, but we've only had 2 periods where it's short. We want to look for 4 periods. So we've only had 2. So instead of switching to the other one, we will stay with the short. So we're going to stay in 2-1. And as you see, that was the correct choice. And we keep doing short, 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 short. And now, short, 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 short. Now here's a both. Okay, so now we would go long because we have 1, 2, 3, 4 shorts in a row. So it could be the beginning of a long period. So we're going to go long. Then there's another both, so we stay long, and then there's a short, so we switch. Make sense? And then finally there's a long, so now we go to 5-1, you see, and then there's a both, but since there's not 4 longs in a row, we stay in the long. Now we have a short, so we start back with the short again, the 2-1. And then there's a both, but we've only had 1 short, not 4, so we stay in the 2-1, stay in the 2-1, and now we have more shorts, and finally a long. So you see how we go back and forth like that, okay? Okay, so now here's an interesting one I wanted to show you, a little bit different anomaly here. So we were in the long, then we went to the short, and now we have a both. But if you look, there's only 3 shorts, there's not 4. So we stay in the short, that's a 2-1. Now there's another both. So now we would go long because you could take these 3 shorts plus we use this both as a short, so that is 4 of them. So now we go long. And sure enough, the market did go long and we got in before it actually went to the long. Okay, that's all you do. Twice a month you put down the date and you put down if the market is favoring a short, a both, or a long, and now you know how to analyze and decide which one you should be trading, the 2-1 or the 5-1. Now let's talk a little bit about how you rate it, a short, a long, or both. And to do that, you can use our compare settings tool. Now, the compare, all of these results that we're seeing is on a 3-month return. So let's say today is the end of your 2 weeks, it's time to update. So we're going to run a 3-month return. As you see here, the date is 3 months, so we hit submit. And since we're in the bull market, we're going to concern ourselves here with just the bull settings. And so what you want to do is take the top 6 settings. So that's 1, 2, 3, 4, 5, and 6. Okay? And now you want to look at the number to the left. Now if there is a 1, 2, or a 3, that is short. If it's a 4, 5, or 6, that is long. So if we add these up, 1, 2, 3, 4, we have 4 shorts and 2 long. This Russell here is dominating with short settings. So you would want to use the 2-1. To what we talked about before, we want to use the 2-1, so we would come down here, we would put that into our thing, and then we would hit update. Now once you're updated, you come over here and click on the recommendation, and it tells me that there's a buy. So now I can go and get started trading this. And now I just sit and I trade all the alerts I get on this 2-1 until my half a month is up. And then when the half a month is up, I'll come back up here to the compare settings tool again. I will run the results of another 3 months, and I will check the top 6, and I will see if I'm going to stay in 2-1 or go to the 5-1. It's just as simple as that. So that's how you do it if you're a basic subscriber. So this is you can use this as an alternative or as in conjunction with the index trading system. And I'm going to be making another video, so I want you to watch out for it. And we're going to compare the 2 trading strategies against each other, the pros and cons, and we'll get more into that. So thank you very much. I hope you learned how to trade the what's hot strategy, and let's make some more gains.